G'day, my name is Brian Johnston, and today I want to talk about training for business management and playing demo game mode and how I suggest you set it up to start. In the previous video I gave you how to place an EA on the chart, which we have done in this top corner Brian concept. There's the EA placed, and I put the 7 longs and the 7 shorts. In the Expert Advisor, you can see I've crossed off the short and left the long on these first 7 currencies. AUD, 2, 3, 4, 5, 6, 7. Separating the longs and the shorts, I'll put the hedge in the center, which we discussed in the previous video, how to put on a hedge. And of course a dollar as a 2 in the center. The next are long, short, 7 shorts, and you can see them. Trade long, false, trade short, true. So on the EA we have 7 shorts, 7 longs. There are the 7 longs, there are the 7 shorts. So I've prepared the first stage for you quickly. I've just gone to each one. This is a long. AUD, gone up to your new order and put on long. Put the order on, buy market long, and did this for the 7 longs and did vice versa 7 shorts. So there we have the natural hedge where we try and keep the drawdown below 5% of the market. The original opening equity on this demo was 5,000. It's down to 4,943 due to the hedge. So there's 14 currencies and roughly 4 pips a hedge average. Okay. This is the current drawdown from putting it on. Just the cost price of putting each trade on. Now on here we have the EA and it's ready to go with the long and shorts with the setting trailing profit stop 3, maximum pips 50. That's the only conditions we've put on trade. If we leave and do nothing else and leave this running, the maximum drawdown on 5,000 will be $500. If we took no sales, did nothing, the drawdown maximum would be ranging between plus 500 and minus 500, probably in reality only 2%, which is about plus 200, minus 200. So if we did nothing else, just left the hedge on, we would have the market efficiency of about 2%, ranging between plus a couple of hundred and minus 200 on the profit on the bottom line. This is the drawdown figure you should try and maintain no greater at any one time than 10%, 500, 10% of the balance, 500, or 15% absolutely maximum is $750. That is the maximum drawdown. So this is what the game is. Your minimum that you like to maintain is about 2%, and the maximum is at 750, and the ideal nice safe comfortable level for me is about 500. Okay, we need stock. We will call this stock to put on trades. Now, at any time any of these goes into profit just with the EA, it's going to take the profit and you'll be out of balance, out of the 7 and 7, which gives you nothing, just maintains you a steady, consistent drawdown. Now, one can see, as for example of the hedge, the current seller's volume is 1,208 against 1,205. It shows the current hedge balance. The trend now is short. If we resort this out, we can see we have two lower losses in sell at the moment. See that? This is just a quick brief, but we're looking on here, our buys and sells ratio is equal. So we're not going to gain many sales until one of these goes into profit and it takes a profit. The EA will do that for you if it's running correct. But when this gets to zero, that means it's not making a loss or a profit. You'll see the turn of the market. We go +1, -7, +3, -2. As an example, when you get the stability of a profit of about, say, +2, why not take it manually? You can take trades, become profit more orientated. Profit equals training. You always want to retain a balance to hold your margin level to its current level at 7 and 7. But say the market is saying now, we've looked at the hedge, we say, just a sec, we'll look at the hedge, it is going down, we want to make some sales, let's look at the short sales. Here's a short sale, so just for an example, we say right now, we're not going to wait for an EA to put it on, we're going to put on the new order, and we're going to put a sell on. Immediately we do that, you'll notice that the current cost has sent you up to 61, and you have one hedge on in the sell. And so your proportions of sells to buys is out of kilter. In other words, you're either going to make money or you're going to lose a little bit of money. But this is game mode and we're testing. Now, vice versa, if we wanted to balance it, we would look for another buy mode that is higher. But let's look at a couple of tricks. We could have done a buy on that as well. But we're looking at where the market was going in the hedge, and it was showing us that the trend is down. Okay, let's look at one other factor. At the current market, CHF is stronger than the US dollar. So if we looked at US dollar CHF, and I've got to find it, US dollar CHF, look, that's a good short at the moment. So let's just go overboard and put a new order on and another short. It's out of kilter, but I'm just showing you the principle. So now we go back into our fashion, and we have two more sells on than buys. So we had 7 buys on and 7 sells. Now we got 7 buys and 9 sells. So we're having more sells than buys. We are tracing the now trend a little bit. The principle, tracing the now trend as these two trades. So we are 2 trades out of balance, where our drawdown can increase significantly, or it can quickly turn into profit. And when it turns into profit, we simply want to go back, take those quick profits when it goes minus, 0, plus. So we're waiting for the best sales opportunities. This is just the basis. Say we didn't put those on, Nothing would happen until you took a profit off these two, the 14 of either, whether it's long or short, you don't care. It would have taken a profit. You would have to replace those sales to put a balance in place. Think about it. Balance. The ideal balance will keep you within maximum of 5% of the market. Once you go out of balance, the moment you move out of balance, you're going to increase your drawdown, but you have a chance of making sales following the now trend using the simple information that's available on the buys and the sells of the market. Ideally, the two ones you want to find without using this are these. Now that's going up. You only have to look at it. It's got more buys. You can see it on the point of the thing. This is pretty stable, but it is slightly down. You're looking for the best one. Here's a good one. Sell volume 109. Look at the chart. Look at how it's going. Euro JPY. Just quickly now. AUD JPY. Not much in it. Okay. That is how I put on two manual trades. Notice as we're talking, the two have gone into profit. Now, okay, close order. Close order. We have now increased our sales by 4. We have retained our 7 balance, and our profit margin ratio has gone up slightly, but we're quite happy. So there you are, two quick trades, low profit, fast, quick trades following the trend is down. We have 1, 2, 3, 4, 5, 6. Sorry. The 7 buys and the 7 sells on. We're looking here at a one that could go into profit soon, but we have to replace that quick once it does to retain the hedge. The trend is down, so trading the hedge down now, we generally need another couple of trades on that are profitable trades, that are going in the right direction, and we're doing the trade. There it is simply. You have to learn playing around balancing the buys and sells and taking profits when profits are due. So right now, I would be looking to putting another couple of quick trades on, the best two in the sells in this area here, because the market is based on the buyers selling the volume, more selling volume than buying volume, and it's going down. That is quickly a brief introduction into making sales the brijon method using the ACD of the spread, which I just showed you and did. Bye for now from Brian. Thank you very much. Have a nice day.